Welcome to the Explainer, everyone. Today, we're unpacking a massive financial story that is literally testing the limits of the market. Elon Musk is gearing up to launch what could be the biggest IPO in history. And in true Musk fashion, he's completely ignoring Wall Street's oldest traditions to make it happen. We're going to break down the wild numbers, his unprecedented strategy, and the massive, undeniable risks involved in a move that has the entire financial sector holding its breath. Okay, let's dive into this. SpaceX is reportedly aiming to raise a jaw-dropping $75 billion, and they're doing it at a proposed valuation of, get this, roughly $1.75 trillion. I mean, we hear billion and trillion tossed around like spare change in tech these days, but let's pause for a second. That staggering number would instantly make it more valuable than Meta or Amazon were just a few years ago. In the context of an initial public offering, this is a record-shattering target that just blows past almost all historical comparisons. Part 1. The biggest IPO ever. Putting these historic numbers into perspective, this proposed $135 share price would instantly place SpaceX among the most valuable publicly traded companies in America. Which brings us to Part 2, Breaking Wall Street Rules and Musk's Unprecedented Strategy. Because while most companies spend weeks adjusting their prices based on investor demand during a traditional roadshow, Musk is doing things entirely differently. And this brilliantly illustrates exactly what we're talking about. Look, traditionally, going public involves this grueling roadshow. Companies are out there pitching to investors for weeks, haggling, and carefully tweaking their share prices based on demand. It's a very delicate, established dance of negotiation. But Musk's approach, it's entirely fixed. A set $135 price tag. No weeks of haggling, no testing the waters to see what institutional investors will pay, just a rock-solid, non-negotiable starting line established before the opening bell even rings. In fact, according to reports, the message to major investment banks is incredibly blunt. This is the price, take it or leave it. You know, normally Wall Street dictates the terms and the pricing reality to a newly public company, but here, SpaceX is just totally stripping away that traditional feedback loop and drawing a massive, hard line in the sand. Now, you'd probably think a hard line tactic like that would scare the big financial institutions right out of the room, right? Well, actually, demand is reaching historic levels. Despite the total lack of traditional negotiation or, frankly, any flexibility on price, bankers are seeing unusually high levels of investor inquiries. Reports are showing that the demand for these shares is incredibly strong. Wall Street might be totally shocked by the method, but investors are practically knocking the doors off the hinges trying to get a piece of this offering. So Part 3, more than just rockets. Let's look at the valuation drivers, because you really have to ask yourself, why on earth are investors so incredibly eager to buy in at this massive valuation? Well, it all comes down to their portfolio. SpaceX's operations are broken into three massive pillars. First up, you have Starlink, which has rapidly exploded into a global satellite internet network that's quite literally blanketing the globe. Second, they're making really heavy investments in artificial intelligence infrastructure, which is an absolutely critical sector right now. And third, of course, is their pioneering next-generation space technology. When you step back and look at the whole shebang, it becomes very clear that SpaceX is operating on a scale and scope way, way beyond just being a traditional rocket company. And because of these three interwoven pillars, global internet, AI, and space tech, a lot of investors are looking at this IPO and asking, is this the defining tech company of the next decade? They aren't just pricing in the physical rocket launches happening today. They're essentially pricing in this sprawling ecosystem that could completely define and dominate the global technology landscape for the next 10 years. That overarching potential is exactly why interest is reaching those historic levels, even with the eye-watering price tag. Part 4. The trillion-dollar risk. Time for a reality check. Now, what's really interesting about this slide is that it sharply transitions us into an impartial, objective look at the skeptic's perspective. Because it's not all limitless optimism. The stark reality of a $1.75 trillion valuation is that it leaves absolutely zero margin for error. Perfection is essentially already baked right into the stock price. This colossal valuation means there is virtually no room for project delays or unexpected technological setbacks. If the company underperforms even slightly, the negative ripple effects at this specific valuation scale would be immediate and severe. Analysts are pointing out a few specific headwinds here. First, as we just noted, there is absolutely no room for mistakes. Second, there are some notable governance concerns regarding exactly how a newly public company of this unprecedented size will be managed under Musk's highly unique leadership style. And third, the enormous built-in expectations.
Sure, if SpaceX delivers on all fronts, investors will certainly be rewarded. But analysts are warning that if growth slows down in any of those key portfolio areas, the stock could face very significant downward pressure almost instantly.
Moving to part 5, changing the stock market and the impact beyond SpaceX. Because let's zoom out for a second. This isn't just a normal IPO. It's a massive test of Musk's influence and overall investor confidence. If this totally unique fixed-price strategy actually works, we could be looking at a company that is quite literally rewriting the rules of the public markets. Just think about the precedent this sets. If SpaceX proves to the financial world that you don't need a traditional roadshow or months of price negotiation to raise $75 billion, it could permanently change how other major, highly valued private companies choose to go public in the future. The entire financial world is watching this closely because the traditional Wall Street playbook might be getting rewritten right before our eyes. So after looking closely at the unprecedented fixed-price strategy, the massive technological portfolio driving the demand, and the very real trillion-dollar risks highlighted by analysts, we have to end with this provocative question for you. Would you buy SpaceX at $135 a share, knowing it's a completely non-negotiable take-it-or-leave-it offer? Do you see the defining tech company of the next decade? Or do you see a stock priced to absolute perfection with zero margin for error? Think about how you weigh those factors, because whatever happens next, this is going to be an unforgettable moment for the future of finance. Thanks for joining me for this explainer. Keep analyzing the data and keep learning.